Alright guys, welcome to this episode on hit and run. This is one of my favorite way of trading the market. What you see in front of you, this is what it looks like for my 1 minute chart. I use this on the 1 minute, 5 minutes. Anything that is 30 minutes and higher, I like using the Ichimoku system. How does the hit and run work? Hit and run is when the market is trending to the upside and for some reason the bottom falls out and you get these big long red candles, or at opening of the market you get these big red candles that just drop, the market is just falling, but it's like it bounces. I'm catching these bounces to the upside, and you can get from 10 cents to 30-cent runs on these things. And it's one of those things where you're kind of like, well, how do you know if it's not falling and going to be staying down here? Well, that's where my indicators will help me see that. And after I show you, you're going to see that you can kind of really predict if the market's going to bounce or it's just going to keep on going. Okay, so how does this work? The indicators that I use for this is the 9. Oh, yeah, let me show you a couple of things while I'm in here. There's a couple of studies that I like using. Is the opening range, which it kind of marks where the market opens at, and it kind of stays within that range for the opening. And then it kind of shows me if it's trending above it or below it. And I have the trend lines, which is pretty cool because everything that you see on a 30-minute charts or 1 hour charts, it kind of gives you like a trend line of where the market is going. So it kind of moves with the market. So as this market was trending down, this other line that's crossed here is letting you know that it broke that trend line. But before it broke it, this line would have been underneath it. So it had two lines going down. As soon as the market broke, you can switch it. It switches automatically, excuse me. And you can change colors. You can make these things solid lines. They're really cool. It gives you like the green and the red of like, don't be buying too close to this because that's resistance. This is a good time to buy it under support. It's for all the members. There'll be a tab there so you can download it for your Thinkorswim. This is just stuff that's available for all members. But let's get back to the strategy. For here, I like using the 9 simple moving average. It's the yellow one, okay? And this is the one that stays really close to the candles. And then I also have my vwap, which is the purple, okay? And the vwap, if you're not familiar with it, is the volume weighted average price. So it measures, the volume in weight. And then I use the 50 simple moving average. There it is. And it's this blue line right here. So I use the yellow, the blue, and the purple for this trading strategy. Then that's all you really need is those three. Now I like to add the whole moving average, these three. I have the 5, the 9, and the 11. So when you go inside of there, you just set it up to the length of 5, and the other one 9, the other one's 11. And the colors that I pick is red and green. So when it's going down, yeah, there it goes. When the market goes down, it will stay above the candles. And then when the market goes up, it stays underneath it. And what's cool about the whole moving average is just like your moving averages, but it cuts down on the lagging information. So it's more, I can fine tune it. It helps me with the heartbeat of the market. I know exactly when the thing is done, so I can get in there and get more out of it. So for example, let's say this one is falling, it'll be red, okay? But when I get all three of them turning green, then I know I can get in and then just ride it up until I hit one of these lines. Or you can wait till the 3 lines turn red and then you get out and you get a nice little run. Okay, the way this strategy works, I should add to this. Let's say this is falling right here and you got one green and the other ones are still red. I don't get in yet. Because then when these students turn red, the market's already running down, and then those are green, but that one is red. So it's kind of still chasing it. So you'll see it's very solid, all 3 greens. Green get in, red get out. See, they're very solid lines. How does the strategy works? All right. When the market falls, you're going to have the 9, and then you have the VWAP in between, and you're going to have the blue. When the VWAP is between the 9 simple moving average and the 50 moving average, you're always going to get a pullback. Always. This is why I call this a hit and run. You're in this stock a very short amount of time. So it comes in, you get the green lines, 3 green lines, you got the yellow, purple, blue, You get in, let's say, we'll call it on the late side here. Let's say you get in at 762, you ride it all the way up to about 773. That's about, what, 9-cent run. Then you're in, you're out. This is stuff you put in about 1,000 shares, 3,000 shares, 5,000 shares. So that way, if you put in like 5,000 shares, you just made $500. You're done. Within what, 10 minutes? That's why it's called hit and run. That's why I love doing these things. All right, let's show you another chart. Where is it? All right, things to kind of be careful with. I was going to show you some other ones, but for some reason I came here, so we'll just go with it. See how this one is not really a hard fall? It's kind of like it's just a very gentle, but then this one falls and you're like, okay, yeah, there it is. Well, look where the blue is. If the purple is not, the VWAP is not between the 9 and the yellow and the blue, then it's not a good trade, because then what happens is the VWAP becomes resistance, the 50 becomes resistance, and then you're just going to get a bounce off of it and you're not going to get as much out of it. Okay, so this is not considered a hard fall. Okay, you want to be like more like you throw a ball against a wall and it bounces right back at you. The best ones are when the 50, the blue one, is still running to the upside and the market falls, because then it'll be bouncing right to that 50. Then you get your nice 20-30 cent runs out of them. As this starts to fall, crosses below, it's starting to cut down on your trading. So let's say you got in here, you see like, okay, that could really get like a 30-cent run, and all of a sudden you see the 50 falling and sloping. Well, your 30-cent run is turning into 15-cent run, now turning into a 10-cent run. And then as soon as, if you already, let's say you already got into this trade, and you just have to wait for it, as soon as it touches that line, get out, and then you just get whatever you can get out of that, because sometimes the market is, it's always unpredictable. Okay, let's go to the next one. Okay, here's a good example of me fine-tuning it with the whole moving averages. The market falls. You got your 3 red lines for the whole moving averages. Comes down, touches, and you see this green bar. Well, but you do see that the whole moving averages are still 2 are red and 1 is green. So that's not a good time to get in. It goes up here, even spikes all the way up there, comes right back down, it's faking it out, and then it falls even harder. Then it comes down again. So until I get my 3 green, I don't touch it. Now I get all my 3 whole moving averages green. I get in. Let's say it's about 607. I got yellow. I got purple. I got blue. I'm in. So you get in here. You ride it all the way up until it touches one of these lines, or until all 3 turns red. So let's say you get in. You get out around here somewhere, 620. So you got in around 607. That's about 14-cent run. Not bad. You made your day right there. Easy $500-600. You're done. Okay, now let's see. AWSM. All right, where's when you get your crossovers? I think I was looking for this one. Yep, your crossovers. All right, let me show this one first, and then I'll come right back to this one. That way you can see it cleaner. So the market starts to do a run to the upside. And that's where people's like, oh, that market is running. And this is where you start, you buy in, and then the market turns on you. And you're like, man, why is it that every time I buy, the market always wants to turn against me? Well, look where the lines are. You got your 9, your VWAP in between, the 50. And what happens when you have this set up? There's always a pullback. So this will be a bad time to be buying, knowing that this is not a good setup. Now, if you would have had the 9, the 50, and then the VWAP underneath it, then you would have had a great support to run to the upside. Let me see if I show it here. Nope, that was the other one. Let's go back to AWSM. Here you got the stock, you got the 9, the VWAP, and the 50, so you don't want to touch that one. And you see the market is moving. You're like, yep, but still not good. Then it moves up even higher. Wait until you get that crossover. As soon as you get that confirmation, that 950 VWAP, then it will run. Even if you get in here after this confirmation and you get in around $2.10, you're running it all the way up to $2.78. That's a 68-cent run. Not bad. But you have to wait for confirmation. If you don't wait for confirmation and you got the VWAP in between the two, this thing can do a hard pullback down to, and then you lose your profits. Make sense? All right, let's see. Things to watch out for. ABIL. Oops. All right. Here's a easy, gentle fall. You don't want the easy fall ones. This is not a good trade to get into. And then notice how once the 50 became underneath the VWAP, how now it became resistance, and now it's bouncing and it keeps going down. It keeps going down. The market is gone because it's working to the downside here. Great if you want to short the market, then you know it's coming. All right, AKRX. Let's see, things to look out for, if I remember why I did this one. All right, here's another. Let's say the market starts out and you see this fall. This is a very gentle fall. I don't want it. Plus, look at the 50, sloping to the downside. So everything is kind of going down and not in a good way. You want this 50 to be staying up here, you know, to stay up there, not follow it down, because then it's just the market just going to continue to run. And then once you get this crossover here, the 50 and gap between the VWAP, it's done. This market is history. You lost it. All right. AKER. What was I trying to see here? Here's a hard pull that just takes off. Man, people, this is where people get tricked into it. But you already know better. Also, look at the VWAP. If you get the VWAP way closer than 9, that market is just, it's going to continue to stick with it. But for some reason, it decided to stop. And then you got the 9, the VWAP, and the 50. So then you got yourself your hard pullback to it. Okay, so this stays like this and stays bad until you get this. But this, again, this could be a faker until you get your confirmation of the 50 crossing above it. Then you got your run. So if you got it in here, 130, you're up to 148. That's an 18-cent run right there, because you got your good confirmation. All right, guys. Hopefully this will help you guys trade. Keep making some money. I'll see you in the trading room.